Hey y'all, Jordan with the Moorhead team here, and we are finally seeing the spring market take effect here. So we're going to do a quick year-over-year comparison, but we're also going to compare month over month. So that means we're going to look at February versus March. Obviously, we're in April here. We just got the stats for for March here in the Austin Metro. We're going to look at what's happening year over year and then how is things trending month over month. So median sales price, that's down 3% year over year. We're $426,220, but that is up versus February's sales price. That's to be expected. January is usually a slow month. We usually see houses sell for lower prices in January versus March, where they're going to be picking up a little bit. But again, why I mentioned that is everything that sold in February, for the most part, got under contract in January and closed in February. Same thing with March. Again, market's picking up a little bit in February. Most of that closed in March. There are some quicker cash sales that close in 2 weeks or so, but that's the minority of sales that happen. Closed sales, we saw those are up year over year. They're up quite a bit month over month, but again, that's to be expected with with January being a slower month and in turn the closed sales in February being slower. We're about even with last year on closed sales or up under 1%. So almost hard to measure there. Of course, because more homes sold for higher dollar value, the dollar volume is up month over month, but you can see that's actually down about 2% year over year. So prices are down a little bit year over year. Closed sales are about the same. So prices went down, closed sales didn't really change at all. So your dollar volume is going to fall a little bit there because of that. Months of inventory. So I know I say this every time, but months of inventory here, that is how we best measure the health of the real estate market. They say under 6 months of inventory, you're in a seller's market. They say 6 months is a balanced market, and over 6 months is a buyer's market. That being said, almost all of us here in Austin will tell you somewhere between the 4 and 6 month range is in a solid buyer's market, or that's what it feels like in the Austin area right now. We're at 5.5 months of inventory here in March, and that's down from 6.5 months of inventory in February. Yeah, it was a little bit easier time to buy in February. And of course, that's normal for seasonality. Active listings, that's down year over year, up quite a bit month over month. So down about 4% year over year, but up quite a bit month over month. Again, that is normal for seasonality to see that increase when we get into the month over month factor of this. But something that kind of surprised me was seeing this go down. I thought we were going to see a bunch more people listing their houses here this spring because a lot of people told me they were going to list their houses this spring. And again, I'm a small sample size, but I talked to a lot of real estate agents and they were talking about so many people are waiting for the spring to list. They didn't do it. So less people listed this spring, March, than listed last March. And because of this, more homes sold or slightly more homes sold, less homes listed. The active listings is down about 9%. That's up month over month, but of course there's more selling in March versus February, or more listing in March versus February. Pending sales, those are up 15.4%. That is awesome to see. So we're starting to get into a more healthy market if we continue these trends. So we have less homes listing versus the glut of listings we were getting. We have more homes selling. If we get down closer to that 3 months of inventory mark, you're going to start to see the market pick back up a lot. When there's too many choices, it's hard for buyers. And right now, there's a ton of choices out there. There's listings everywhere. It seems like everybody's always cutting their price, so you're really not in any sort of hurry to buy a home if you want to buy a home. A lot of people are saying, I don't think it's a good time to buy a home, so they're just sitting it out. But as we see things start moving and prices stabilize and maybe prices start going back up, the market gets a lot healthier and people start moving a lot quicker. Days on market, I know it's probably cut off on your end here, but we were at 91 days on market for February. We're down to 85 days on market in March, but that's actually up 5 days versus last year. And again, it's not a huge change, but it's kind of what we're seeing is the market's just slower. Believe it or not, interest rates are lower than they were this time last year, but people are a little nervous with the geopolitical happenings that we have going on, the Iran war. They're just not sure if it's the right time to make a big decision. So you're just seeing things move much slower. You're seeing people move much slower. Average close to list price, that's down year over year. We're at 94%. Average close to list price, 92.8. That's up from February. That was at 92%. Again, not a shocker for the seasonality reasons. So what we're still seeing here is we're still seeing homes sell quickly when they're priced right, when they look great, when they're in a good area, and when everything's fixed up on them. So we just sold a flip property in South Austin in 2 days. It flew off the market in 2 days with multiple offers, but it looked amazing. It was in a great area. It was in the Cherry Creek neighborhood of South Austin. Everything was fixed. It was ready to go. It was literally a move-in ready, perfect house in a great neighborhood. Cherry Creek is a great neighborhood, but it was priced right. We priced it slightly below the market value. We were looking at it, we said, hey, market value is probably 425, 430. We priced it at 419.9. It flew off the market. If you want to sell your home, that's the way to do it. Make those little fix-ups, make it look great. Fix all those little things that are broken with it you see every day and you say it's not a big deal. But you got to price it right and you got to price it aggressively right now. So you're not going to lose money if you're doing this. You're not saying I'm going to lose that 5 or 10,000. The reality is you're going to sell the home so much quicker. You're going to save on holding costs. You're going to save the property taxes, insurance, mortgage, all those holding costs. You're probably going to sell it for more money because you have that urgency that people need to buy this house. It's a well priced, competitive listing, and you're going to get some competition. So you might actually push the price up. So it's really important to price homes aggressively right now. Make them look perfect. If you're a buyer, though, if you're a buyer right now, there's lots of opportunity to take advantage of people that are not doing this. So people that don't make their homes look perfect, they don't price them right, they price them a little high, they don't fix those things, they don't make any updates. Those are the great deals you can get because there are a lot of sellers out there that absolutely need to sell right now. If you're a buyer, take advantage of that. It's a great time to buy a home. I've not seen in my career as a real estate agent, I've been a real estate agent for about 8 years here now. I've not seen a better time to buy a home. There's lots of statistics saying that, we are going to start seeing rents go up here soon in Austin. I know that the equation, if you're a renter versus a buyer, it's probably cheaper to rent right now. But a lot of that rental inventory is getting absorbed. And over time, over the next 1 to 2 years, as all that rental inventory gets absorbed and not a lot of new units come online because there's not a lot of new permits going out for new buildings going to be built, rents are going to start going up and it's going to look less attractive to rent versus buy. At the same time, we might see interest rates go down. So you could run into a two-factor effect here. You could have rents going up, you could have interest rates coming down, and the competition for housing is going to shoot up when that happens. You're going to be sad you didn't take advantage of it right now. Yes, temporarily, renting is much cheaper than buying. But in the long run, you don't have anything. You just gave the landlord all the money, you paid down their mortgage, you paid for their taxes, you paid for their insurance, and then you put some money in their pocket. Whereas if you had your home with a mortgage, you could be getting all the tax benefits. You could be benefiting from buying at a low basis right now and watching them appreciate over time. And you could be paying down your own mortgage. In the long run, it makes a lot more sense to buy. In the short run, yeah, you're going to save a few bucks renting, but in the end, you don't have anything. You guys have any questions about the Austin real estate market? Reach out to us here at the Moorhead team, jordan.moorhead@kw.com. Drop a comment in the video below, and I'll make sure all of them get answered. Thank you, and have a great day, y'all.